What's up guys, it's Nathan here. Are you ready for a potential shakeup in Australia's monetary policy landscape? In this video, we'll discuss the recent Reserve Bank of Australia review and its recommendations, which could have a significant change to the frequency and magnitude of interest rate adjustments. If you're an Australian borrower or simply interested in the nation's financial future, you won't want to miss this. So let's dive in. Over the past year, Australians have become all too familiar with the unsettling process of monthly interest rate rises. However, this pattern could be on the verge of a significant transformation. A recent review into the Reserve Bank of Australia has proposed that the new board should convene only 8 times a year to determine the official interest rate movements. While this shift could lead to less frequent adjustments in the official cash rate, it also could result in larger changes when they do occur. This is a noteworthy departure from the current process, which sees the board meeting 11 times a year. The Reserve Bank of Australia typically increases or decreases the cash rate by an adjustment of about 25 basis points. Adjustments of 50 basis points or 0.5% are known as double whammy hikes and are equivalent to implementing 2 rate changes simultaneously and are generally considered more impactful. With the proposed change, the new monetary policy board meetings might adopt more of a double whammy hike approach to rein in and control inflation, particularly given the rapid growth in inflation we've seen recently and the lack thereof meetings, especially given that they'll only be doing 8 meetings a year instead of 11 that they're currently doing, which results in the board no longer making monthly rate adjustments. On the other hand, the review argued that reducing the number of meetings per year would afford the new board additional time and access to data which would help them make more informed decisions. It stated that the Monetary Policy Board should move to 8 monetary policy meetings a year to allow time to consider the issues and engage with the Reserve Bank of Australia staff within each meeting cycle. And if you find value in this video, please consider hitting that subscribe button, as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. This change to the Reserve Bank's approach to interest rate decisions could have a far-reaching implication for Australian households and businesses alike. For borrowers, the prospect of larger, albeit less frequent, interest rate adjustments might make it more difficult to predict and manage loan repayments. Lenders, on the other hand, might face challenges in keeping up with the changing interest rate environment and ensuring their products remain competitive. In addition, the Australian economy as a whole could experience increased volatility due to more significant interest rate adjustments. The potential for larger interest rate hikes or cuts could create greater fluctuations in consumer spending, business investment, and overall economic growth. This, in turn, may create uncertainty and impact the country's financial stability. It's worth noting, however, that the government has previously stated its intention to adopt the recommendations of the Reserve Bank review. As such, it's likely that the changes will be implemented in the near future. Australia must be prepared for a new era of monetary policy and adapt to the changing landscape of interest rates decisions. As the proposed changes to the Reserve Bank of Australia's decision-making process unfold, it's crucial for Australians to stay informed and monitor any potential impacts on their financial well-being. Borrowers should consider the possibility of larger interest rate adjustments when planning their budgets, while lenders may need to also reevaluate their product offerings to remain competitive. The review's recommendation to reduce the number of Reserve Bank of Australia meetings to 8 times per year signifies a notable shift in Australia's monetary policy landscape. While this change may lead to less frequent interest rate adjustments, it'll also result in more substantial rate hikes. The Reserve Bank of Australia's review has also posed other significant changes to enhance the transparency and communication of the board. One recommendation is that the Reserve Bank of Australia should hold press conferences following each meeting. We see similar practices in the United States when their central bank meet up, and this is where the US central bank head provides a statement after their interest rate decision. This increases transparency and could potentially help the public and financial sectors better understand the rationale behind the central bank's decision. Another suggestion put forth by the review is to appoint a chief communications officer to strengthen its strategic communication. This move would facilitate in more effective communication between the Reserve Bank of Australia, the financial sector, and the general public. In turn, it could help alleviate any confusion and uncertainty surrounding the bank's policies and decisions and foster greater trust in the institution. Moreover, the review recommends conducting 5 yearly reviews into the Reserve Bank of Australia's monetary framework and policy tools. This periodic evaluation would ensure that the central bank's practice remains relevant, effective, and in line with the evolving economic conditions. By regular reviewing and updating its approach, the Reserve Bank of Australia can better address the needs of the Australian economy and maintain its credibility as a key financial institution. Now, as for the implementation timeframe of the proposed changes, Treasurer Jim Chalmers has indicated that the government and the Reserve Bank of Australia are collaborating to implement all 51 recommendations. The goal is to have them in place by mid-2024. Chambers emphasised that the importance of working with various stakeholders, including the Parliament, the opposition, regulators, the Reserve Bank of Australia and its board, and the broader Australian community to ensure that the right economic institutions and frameworks are put in place for a better financial future for all Australians. These proposed changes to the Reserve Bank of Australia's decision-making process and communication strategy represents a significant shift in the way Australia's central bank will operate. By adopting these recommendations, the Reserve Bank of Australia can foster a more transparent and communicative environment which will not only benefit the financial sector but the broader Australian public. And remember to like, share and subscribe to stay informed with all the latest property and finance. The impact of these changes will be felt across various sectors of the Australian economy. With greater transparency in interest rate decisions and more effective communication from the Reserve Bank, businesses and individuals will be better equipped to plan and adapt for changes in the monetary policy. Additionally, by introducing regular reviews of the Reserve Bank's monetary policy framework and tools, it'll help ensure that the institution remains responsive to the evolving economic landscape. Did you know here at Hunter Galloway we get home loans approved? So if you're looking for a mortgage broker to purchase your first home, investment, or even refinance, we can help. Call us on 1300 088 065. We work with people Australia-wide. There's no cost for the service. Or visit our website, huntergalloway.com.au. Fill in the contact form. Guys, as always, thanks for watching and we'll see you next time.